Well, hello again, friends,
Hello.
We're back.
listeners, fans, hopefully. A lot of
hopefully.
fans, hopefully. Fan.
Like and subscribe.
Definitely, yeah, exactly. Episode 93 today.
Ooh,
Yep.
big number.
Staples crew, Keith, Kyle. Lisa is trying to host again today.
Little problem getting the computer to work this morning, but it's all good.
Let's not say that in
not
front of
focus.
everyone. Let's now it works. Anyways, a little technical issues here, which has nothing to do with me, apparently.
No.
Let's say so. Anyways, let's start with Two Truth and a Lie, and let's get us rolling. And I brought us a little fun episode here for Truth and a Lie. We had Lunar New Year yesterday, and we entered the year of the fire horse.
What?
Yes, which last happened in 1966, I think. So I thought we do a little fun.
Kyle, you a
with
big
that.
Lunar Year guy, and you're
I am
up to date on
not.
all this stuff?
I am
Okay.
not. I didn't know
Nor
it was
am
the
I,
year of
so
the fire
this
horse.
is-
Although now that you say the element in front of it, that wasn't like a thing. I feel like in our
I don't
parlance.
remember that.
but I feel like
Yeah.
this year was the year of the rooster, right? What is the new?
No, the snake.
Oh, the
It was
snake.
a snake.
Yeah.
But what element is it?
I don't know. They just said it's a fire horse because it's like so rare that it's so special.
maybe
I
this
don't
is
know.
a special one. All
I
right.
do not follow that. But do you know your birth year? Like what animal you are
No,
in that calendar?
do you?
I think
Yeah,
I'm
I
an-
know I'm the rooster.
I'm an
Mm.
ox.
Okay.
That explains
Yeah.
both of it.
When-
Ooh, Keith is coming out swinging
Yeah,
today.
he's probably a rabbit.
Yeah, probably.
When I was a kid, we'd go to the
Scared
Chinese
balls.
restaurants and they would have the
Oh yeah.
the whatever the images on there, and I always wanted to be like something cool, like the
Yeah.
tiger or the
Yeah.
dragon.
Me too, and I'm like the rooster. It's like, what the
Mhm.
hell is
Mhm.
that?
Not bad.
Anyways.
My mom
Ox.
was like the mouse or whatever, and I'm like, could be worse.
Could be worse. Anyways, let's jump right in. And I brought a little episode with Lunar New Year and markets, obviously. So let's start. So A, historically, returns in the last few days before the Lunar New Year are significantly above average. B, the Lunar New Year effect is stronger in emerging Asian markets like Vietnam and Malaysia than in developed ones like Japan or Hong Kong. Or C, the year of the rooster has historically favored growth-oriented stocks over value-oriented stocks in global markets. Keith already looks scared, so let's
I
start
do.
with you.
Well, since you're the rooster, I'm gonna let's go
Mhm.
start backwards here. See, the year of the rooster. I think you just said that was last year.
No, the snake was last year.
No, snake is this year, and
No.
you said last year was the fire horse.
And what's
The
this year?
fire horse is now.
Oh, is now?
Yeah, we entered the year of the fire horse. Last year was the
Oh.
snake.
Did you hear the other?
I don't know.
All right.
I'm
Aw.
already confused this episode. I'm
Close
going
it down.
Yeah.
We're done.
The year of the rooster. So Lisa doesn't seem like a growth investor, and she's the rooster, she claims. So I'm gonna say that one just by default. I'm gonna say that one. B, I think is true. That just makes sense. Vietnam, Hong Kong. I'm leaning toward that's true, and I'm gonna go with C's false because Lisa's a rooster.
I
Kyle,
also am gonna go.
That
with
reasoning
C.
is good.
It's pretty good. I'm gonna ride those coattails.
You're both right.
What?
Yes, I should have not told you that I'm a rooster. Yes.
That was the tell.
Yeah.
That was the tell. Yes. It's actually the year, and one investment firm made like an interesting, funny, historical statistics, like that years when four-legged animals are, the main show, markets tend to be stronger.
We're at
than
the horse
two.
now this year. Yeah, let's go back. We're at the horse in
Right.
2026.
And horses are generally strong years, but the last year the fire horse happened in 1966. Markets were down like 7% or something.
Ugh.
So, anyways, let's leave it with the Chinese animal situation here. It's very confusing. Anyways, let's start with an interesting stat I came across yesterday, an interesting chart that I thought, okay, we might have to discuss that a little bit. Just because I think it's funny and we always hear it the other way around, that older Americans spend longer on their mobiles than younger ones. That's what a new study figured out.
Mhm.
And we always hear the youngins cannot put their phones down, and they're doom scrolling and just on socials and not participating in the real world anymore. But apparently that has switched, and older ones, and I should probably clarify what that means. So younger Americans, the youngins here between 17 and 25, and older ones, and that might hurt a couple of feelings now, um 36 plus years. That's the older cohort, and that kind of moved ahead of the younger ones in mobile usage. My age cohort seems to be statistically insignificant because I'm not even
You don't
on
show
there.
up
I'm
on
not
there?
I'm not even on this chart. So anyways,
Lisa, I thought you were in that youngins, the 17 to 25. No, not
close, but not
All
quite
right.
anymore. Anyways, so yeah, it's interesting because the young ones spend 350 minutes a day on a phone,
Which is crazy.
Which is crazy. That's 5.8 hours like straight just on a phone.
Yeah.
That's insane. And older ones, so again, 36 plus year olds, 352. So it does not give a whole lot of difference, but it is a little bit more. So why do you think that is? I mean, we always hear it the other way around. So that's kind of weird. It kind of shocked me to see that. So Keith, why do you think that switched all of a sudden?
Yeah, that is interesting. Obviously, I have myself and my wife are in the older one, and I have 3 college kids, which would be in that younger one, and they are on the thing all the time, always in their hand. But that being said, it's certainly myself, I probably use it a little bit like when we're watching TV, if I have an iPad and I'm looking for some research on remodeling or whatever it is, right? So it's kind of not heavily using it, not doom scrolling, but on it. And I get to speak to my wife, and I always used to yell at the kids about being on their stuff. She's on nonstop, just, and it's weird stuff because it's more her watching. Instead of watching the TV, she's watching her phone. It'll be whether she's maybe doing something in the kitchen. All of a sudden, she's got that in the background just playing just for noise, but she's got it on all the time. And I was
like a show or music?
Yeah, like a show. And sometimes music, but I'm like, surprises me how often she has that now, wherever she's in different parts of the house doing whatever. And all of a sudden, I'll walk in like,
I mean, part of that, when you look in the chart, I mean, the usage goes just up anyways for all age groups. And I mean, it's kind of logical because we do a whole lot more on our phones now. We kind of do banking, we check our emails, we do research, reading articles. So not all of that is just useless. Spending our time useless. Not all of that. But so Kyle, I'm interested in how do you think your time splits up between doom scrolling and all of that and really doing something productive?
this ought to be good. I know kind of a little more hardcore on the devices.
Yeah, I would say my usage is way less than this. Per day, it's probably, which is a little misleading because I do look at the stats on my on my phone at the end of the week. It's probably about 2 to 2.5 hours a day, which 60 to 70% is actually just travel, like commute, and it's podcast or music listening. So it's passive. And then the other kind of 30-ish% is, checking email. There definitely is some doom scrolling, but I limit myself. So I've got a 15-minute limit on there, and then I'll.
Oh, you actually do?
Yeah,
like a timing.
I have a timer
good
on it.
for you.
So I usually when I'm doom scrolling, I like the serendipity of
something you come across.
And so usually it's like it'll be investment related. Like there's like I enjoy memes. I enjoy funny.
Yeah, you showed me a couple
funny stuff. Yeah, I mean there's
the other day.
I like some of that stuff. So that's definitely in the feed. But I will find things that are investment related, and then that actually like curates in the algorithm. And so I'll find like Amazon warehouse robots, like this new thing, or I'll find like the Optimus robots, or like quantum computing stuff, or just random military stuff or whatever. But yeah, I would say the phone is kind of it is interesting because this chart doesn't go back very far, only 2023. So for those watching and listening, it's 2023, the numbers were about, for both cohorts, about 250 to 300 minutes, and they've gone up about 50, kind of an extra hour per day over the last 2 years. So I do think that's interesting. I can't imagine spending 6 hours a day on your phone.
6 hours. I was shocked
No.
about that stat. I was like, who has time for that?
Well,
I think a lot of kids like music, right? And there's
Right.
stuff
Yeah.
passive, whether they're
It
trading
does not
or walking to
clarify if it's
class
passive or active, but
Yeah.
I think it must include passive,
Right.
like listening as well. Otherwise, no one would have time for that.
Right.
So is it fair to say then maybe for the younger ones, it's more like the useless social media? I mean, it's not always useless, right? I
No.
mean, there's a lot of networking and then
Yeah.
finding things always also there that
But a lot-
kind of spark creativity and stuff.
I think depending on the age, though, like if
it's
you're
more useful time spent maybe for the older ones rather than the young
debatable.
ones. I mean,
No, it's surprising. I think it's just part of our
Yeah.
culture. That's
Yeah.
my point. My wife having it
Mhm.
now all just shocks me. It's just like you're just like the kids, but that's her
Mhm.
form of
Mhm.
entertainment. And instead of
Mhm.
watching TV, I guess going back 10 years ago, you probably always had the TV on in a room, at least
Yeah.
us. And so
Yeah.
sometimes you watching, sometimes you wouldn't. You just walk in and out. So that would be 10 hours on time, or
Mhm.
in the evening or whatever that.
Well, it's
was.
kind of funny because it's almost like,
Mhm.
it's like, it's not a pie that expands. It is truly a zero-sum game
Yeah,
in terms of everyone has the exact same minutes in the day.
Mhm.
And so it's kind of seems like a moot point, but I mean, there's nuance to it. It's like, for my kids who are young, are you watching a show on TV or are you actually picking up a device and watching the
iPad,
show?
yeah.
An iPad. And we do limit the amount of time that they have on an iPad, especially during the week. There's parent controls or whatever on there. So we limit them to 30 minutes a day, and most of the time they don't even pick it up, so it's not an
Yeah.
issue. But it's almost like there's this level of, you want them to build self-control
Mhm.
into it, right? You don't want if there's a purposeful limit, it never teaches them, like, have the internal mechanism to turn it
Just
off
turn
on
it
your
off,
own.
Mhm.
So clearly on this chart, the 350 minutes a day, none of us have internal wherewithal to
How about you,
say
Lisa?
no.
You're not in this chart, but I mean, do you
I'm
spend a fair amount?
obviously statistically insignificant here.
Do you look at your minutes on your
I
phone?
look at Monday morning. I get
Spill the
my
tea. What do we got?
stats.
Yeah, what do we
Yeah,
got?
it's kind of also like two hours,
Yeah, so
which
mine's
shocked
probably
me
a little less than
already
that,
as
yeah.
well. It's like 2.5 hours. I mean, it
But in the
depends a little
car,
bit.
like passive, or was it all active?
Obviously, the commute is Spotify, so
Mhm.
podcast or
Yeah.
music, depending on my mood, on
Mhm.
whatever. But that's passive. But that's already, like, I would say, an hour on average for both morning and evening. And then throughout the day, a little bit there. Then checking emails. Then reading a couple of articles or researching something, which I'm faster in the evening with my phone and not opening my laptop actually. So that happens all on the phone. So, but obviously also some doom scrolling and some useless stuff. And it's interesting because once you start this, time flies by, and it's like so addicting. And it's like we always say, okay, it's so dangerous for the youth, but it
Yeah, it
sucks
can-
you in as an adult as well. You
Mhm.
really have to have like self, limits and self-control to say, okay, enough of that useless stuff, and
Yeah.
let's spend the time a little bit more useful. But yeah, it's
Well, we
definitely
we
interesting.
didn't get over to Keith here. What
Yeah,
spill the
what is
dirt
your-
here? What do we got? How many
On-
minutes?
It's probably about similar to what you guys.
Yeah.
I
Is it?
mean,
Yeah. Well, your
my
drive
commute.
is-
But I listen to radio on the way in and then
Mhm.
podcast on the way home. So that's 45 minutes a day, and then I don't know. I'm busy doing stuff, so I don't do too much doom scrolling. I maybe
Mhm.
do 10, 15 minutes a day right before I go to bed. Just it's more news, and then all of a sudden if I go down a rabbit hole, then I'm like, ugh, I spent enough
Yeah.
wasted time on this, so
Mhm.
I'm not terrible on that. Maybe as I'm building projects and stuff like that, I do spend YouTube like, oh, how
Yeah.
to do this, how to do
Mhm.
that. So I
Yep.
do spend, and I guess I find it useful,
Yeah.
Mhm.
but I guess it's still time spent on a device.
Right, yeah. But more useful, at least. You learn something, and
theory.
then you research. Yeah,
My wife's
right.
like, yeah.
You can argue that with everything,
Yeah.
right?
I do. Before we move on, I the chart is interesting. It reminded me of an article I saw. I think it was on Monday. I was talking about how in high school now, the amount of books that they actually assign kids are down by like four times. So they used to assign like 12
over the
books
course
over the course of the year
Yeah.
for normal like English studies, social studies, whatever. It's now down to 3.
Oh, that's
not
nothing.
good.
And it's nothing. And the commentary on why that was happening was because the attention spans are so poor.
Oh, yeah.
They cannot sit and read for
right.
Yeah.
And so it does. It's clearly a corollary here. But yeah,
it's also interesting because with the rise of AI and ChatGPT usage, and we always had to, I don't know how it is here, when we had the book assigned, we had to discuss it obviously in group and then had to, write a summary about it that we really kind of read it. I mean, now you give ChatGPT a prompt, give me a summary that it seems like I've read this thing and actually didn't. So
make sure it's not too good.
Right. I mean, we even cheated the system, right? I mean, one read it. The first one who was done is like, okay, this is what happened. Write it a little bit differently. So we didn't read all the books back then even.
Yeah.
So it's interesting, but yeah, not healthy, definitely not, because reading gives you a lot of perspective and teaches you a lot. Anyway, so
on that,
a heated topic on mobile phone usage between young and old. So let's move into a little bit more substantial stuff here. And I brought a couple of topics today, a little bit of everything. Most and foremost, and we started this discussion last week with a podcast. So it's a little bit more of the old, right? So the AI Grim Reaper is sifting through sector after sector. So we're not done there. So all the software sell-off also caught up all the economy. We were touching on that a little bit last week already. From wealth management to trucking, logistics, traditionally sectors that were so far out of the whole AI discussion and whole AI fears were suddenly caught up. There was a lot of news of new models that could potentially influence different sectors. And the software industry, so just that subsector of tech, is down 30%. So we are in a bear market with the software sell-off situation. But that's, and I found that interesting, it's the 5th bear market in the last 8 years. That was kind of astounding to me that it was that many. I mean, there were different ones like price induced ones and earnings related ones, but it's the 5th one in the last 8
That's
years.
A lot,
so I found that quite interesting.
Just for that industry, or
just for that? Yep.
Really?
And I brought a chart here. Our listeners unfortunately cannot see it, but here we have a chart. The last 5. So we are in the 5th right now. And kind of what happened. It was 2020. Obviously, that was due to COVID. That was with all the others. 2025, that was tariffs. So also with all the others, 2018, 2022 with the whole tech frenzy, and now 2026 with AI fears here. And I kind of want to talk a little bit about, because I sat there and thought we had such indiscriminatory sell-off, like everything was caught up. Investors were just selling and not selling first and doing research later and actually digging in who could be actually a winner or a loser, who is maybe unjustified sell-off here. And I have a question, because there are so many new AI news coming out, again, hitting different sectors. So are we in a time where it's a little bit of an AI paralysis, right? So there's so much overwhelming news that investors just overwhelmed with all of this and just cannot comprehend this anymore, because we did not see a whole lot of dip buying yet. And that's what led me to the thinking, okay, we saw that last year with DeepSeek. There was quick dip buying. We saw it with tariffs and all of that. And now it's more like paralysis. It's like, okay, we are rotating into more other areas, into more hardware AI. But within software, it's kind of still, investors are fearful of going back in. So is it that maybe because they're overwhelmed and it's just too much information all at once? Kyle, let's start with you.
Yeah, I don't know. I think the multiples were so stretched. I mean, everything was priced for perfection, more than perfection. It was just very fast on the upswing, and people were, investing kind of blindly, I think, in the space, and everything was working. I mean, if you look at rolling correlations in the group, everything was just kind of moving in sync. We've seen that unwind considerably in the last 3 to 6 months with especially with the broadening out for the 493 versus the Mag 7. That being said, I think, yeah, I mean, there's really a palpable fear, and people are moving more into real physical assets, manufacturing real goods that that you can kind of put your hands on and feel, that won't have the AI Reaper come to get them. So it is interesting looking at it, though. I mean, Charles Schwab was down 11% last week. C.H. Robinson, of all companies, is down 12. I think
Nothing is wrong
during
with
the day
these,
when it
yeah.
opened, it was down 20.
Yeah, it's
crazy.
Gallagher down 13. I mean, some of these names are pretty crazy, but it is interesting. I was looking at Spotify yesterday, and the key thesis on it, I was reading Barclays and Goldman, some of these brokers, and the commentary kind of was amusing to me, because they was talking about how cheap it was on a valuation standpoint relative to what the market multiples are for it. And market multiples are 27 times, and historically, kind of pre-COVID, it was like 16 times, and in terms of what the absolute multiple should be. And so you look at it and it's like, you're including the Mag 7 and everything with it. It's not really a fair assessment. So if AI comes to get them, which that's the fear, just like all the rest of these, is it going to mean revert back? Probably not. I mean, there are show me stocks now, and show me stocks take a long time to work, even if earnings are coming in. It's like that beat down of earnings expectations. It's going to take a while. So I don't know what the shakeout will be, but it is surprising that some of these names are being beat up as much as they are. Like C.H. Robinson is just kind of a head scratcher a little bit to me.
It's interesting because I've read a note from JP Morgan today saying this does not make sense at all, because if we think of, because investors are kind of selling, just selling off, right, without really thinking, and they were saying, hey, it doesn't make sense, because if we think that because out of two reasons, because they think, okay, AI is coming for the software stocks, and AI is killing all software as a service companies. On the other side, they are worried about CapEx spend. That's why names like Microsoft and Amazon kind of not doing all the greatest. But both cannot be true at the same time, because if they think they are spending too much CapEx, that should be good for. If they think they're spending too much CapEx, then it makes sense that software is selling off. But that would be good for all the hyperscalers. They should do better. If they think they're, the other way around, that, software would do better because if they're spending less CapEx, that maybe software does not live in fear of an AI disruption all that much. So kind of both cannot be true at the same time, even though we see it, which makes it a little bit irrational how investors are behaving at the moment. So Keith, what are you thinking at the moment? What are you seeing?
The AI and software is very interesting to me. I've covered growth stocks forever. First of all, the backdrop is the markets have had 3 great years. They're expensive. People are looking for a reason to rotate. I think these are just some of the in the backdrop that, and then saying, oh, this is maybe a reason to rotate. And I think that's playing in the background as well. But going to the software companies, generally speaking, people loved them. They loved to invest them, especially growth investors, because they had recurring revenue. They had good, strong margins. Or instead of, industrial companies at, 10, 20, 50, whatever their margins are.
And the cyclicality.
The cyclicality. These are at 70, 80, 90% recurring revenue, no cyclicality. You need the software. So now that's a game changer with AI. Now, I think as a whole, I think it's shoot first, ask questions later. I think they're basically investors. I think program trading are just saying basically you're software related. Your stocks were expensive at one time, so that's the reason to sell off. And then AI is coming for you. What does that mean? AI is just a super version of software. It really is. I mean, it's just it's just, can they really displace some of these software companies that are ingrained in these companies? I don't really think so, as much as what the stocks are telling you. Now they're getting to valuations that I've been saying I've been underweight technology since last fall, just as a whole kind of.
He told me he's upset that he shorted Palantir in the beginning of the pod this year. He's ready to buy into it.
You are
No,
locked
not
in,
yet.
Keith. I'm sorry.
Not yet, but that's a different name because of the valuation. But there's software names that I haven't owned as many as I have historically, just due to other reasons. I think broadening out, not the AI, but now I think there's names that are down 50, 60. Some are getting closer to 70%. Now I do think AI is real for some of these industries, and if you're seat-based, license-based, I think your incremental automatic revenue per seat going up per year, that's gone. Oh, by the way, now we're declining in seats, and that's what the stocks are telling you, that basically they're not having free reign of expanded seats, expanded margins, recurring revenue. That model is going to be displaced. But there's certainly, whether it's security software, I think that's a space that I don't know if AI can necessarily displace. There's different names like
the CrowdStrikes or
CrowdStrikes, your Palo Altos. Again, there'll be some pressure on there, but I think AI just makes companies just generally a lot more efficient. So we're getting the shoot first, ask questions like names like Adobe. I can see why that's underperformed. We don't own it, but you can chat GPT a photograph, a logo,
or a video.
It's crazy. I mean, so that stuff just completely understandable. But there's other names that are more enterprise based that I don't see people ripping out their whole CRM can be partially displaced, but other things that, ServiceNow is a name we'll probably talk to about a little later, that, they use AI to benefit your kind of software, moving it around, things like that, and automating that. I don't think it goes away. It maybe get used a little less seats, but not down 60, 70% stock.
Right. And we also like what we heard, like with all of these new tools. I mean, that is nice to see, but it does not get introduced overnight.
No, it
I mean, it takes a longer runway. Sometimes it never really comes to fruition anyways. For example, like Altruist, which the tax planning, estate planning thing, which rattled Schwab and Raymond James and a couple of wealth managers. That's kind of maybe useful, but it kind of reminds me of the robo-advisor, right? The return of the robo-advisor. We saw a couple of reiterations already when it was like, oh my God, the robo-advisors are coming for wealth management. We are all obsolete. But there will be no financial advisors anymore and stuff. Well, that didn't happen. So there's still a very much human element to it. And it is maybe a good technology in some areas, but it never really,
I think that AI can make an advisor more efficient,
right?
Help them do multi things that for the client that maybe they couldn't do before, and I think that makes them more valuable, not less valuable. I mean, so
and in some areas, at the end of the day, in a more tech heavy world, that's the human element that gets maybe more important than at the end of the day. I mean, it doesn't go for every industry, but again, like some tools never being introduced the way they were supposed to, or never really set foot.
Yeah, you gotta be. I mean, AI too. You have to be careful. You get hallucinations and different things that, if you're planning your whole business model on some AI input, now all of a sudden it goes sideways
with no human oversight anymore.
That could be a big problem for a company. So that's why I do think people are selling stocks off pretty aggressively. There's probably buying opportunities. So that's what we're doing right now, is kind of looking through that list of sold off names. And where is their value?
Yep. You kind of led me to the next question, Keith. Yeah, because it's a stock pickers market, so we have a little stock picking fun now. So tell me a name that was beaten down with the whole frenzy here, tech name or whatever, that you think will not be displaced all that much by this and is maybe a little bit unjustified, and where we could maybe see some good value going forward.
We just touched on two areas. I'll give you probably just quick two. Is ServiceNow. I just mentioned this. I think that's a software name. So if I want to go into that ring of fire of software, that would be the one name I would look at in software. I think they have a little more defendable moat. I don't think they'll get displaced by AI like the stock's telling you. The multiples at 20 times PE multiple. Normally they're trading at sales multiples or EBITDA multiples. So this trading cheaper than the market, which 2-3x the market growth. Now the question everybody's having, what's the terminal growth rate, out a few years? I still think it's fine. So that would be the one that in the software. And then you touched on wealth management. I think any of these names in the wealth management, I think that's overdone too quickly. LPLA is basically a big platform. It's got custodian, financial advisors, things like that. That would be a name of interest.
Kyle?
Yeah, for me, I would say it would be some of the government IT names are very, very interesting because they've just been bloodied not only from Doge last year and the efficiency cuts for the government, but then also the AI. It's kind of like two reapers coming at once. So some of those names, there's probably some value traps in there, but think about like Accenture, think about Gartner, you think about names like that.
Ooh, those are
Khaki is an interesting name. It has not seen any of the air come out of it. It's a very more durable kind of defensive business, but they do a lot of more of the cyber capabilities for the government that aren't really talked loudly about. So those kinds of names, Leidos, those are interesting names to me.
And there might be an avenue for these names. I mean, when the government, what we heard yesterday with Anthropic, that they're not really lined up anymore, and maybe they're looking for a different provider here instead of Claude.
Sounds like an opportunity for Tesla and XAI and that whole group.
Yeah, consulting makes that one I'm a little more leery of just because of
very leery.
Right? Just because, like you said, there's probably some winners in that group. It's like, dang, if a whole industry, like that's why insurance brokers too, anything that's kind of there's got a middleman, kind of some service overlay that you have to consult with somebody. That's where AI, I think, could displace a good piece of that business.
The consultant. I think when it comes to that, and I talked on Schwab Network yesterday about the name, and they reported earnings after the close yesterday, Palo Alto, which I think got caught off. And I think the whole cybersecurity names, and not all of them are should be seen as the same. I mean, it's the market is very fragmented. There are a lot of small niche players in there that are very specified with one specific area of cybersecurity. I think Palo Alto is more the one-stop shop. They are doing large acquisitions there, and I think for them, they got obviously caught up in the whole frenzy because they're software. But I think AI is a demand driver for them rather than anything else.
Totally
because
agree.
the more of this what we hear, I think there is not a whole of disruption. I think that kind of is the bread and butter for them going forward, and that gives them even more business because companies need to be ramped up on security on that, because the threats that are getting more sophisticated by the day, the whole environment has changed. We hear nearly every day, every week, another big company got hit by, or taken out for a while, taken offline for a while with all of these threats and cybersecurity attacks. And so demand driver on that side. On the other side, they're using AI internally for efficiency and even detecting that even better, all of these threats for their clients. So I think cybersecurity is an interesting area that got caught up really badly, but I think unjustified. Again, you might be cognizant because it's very fragmented. So I would say such a name like Palo Alto is really interesting at the moment. Still expensive. I mean, still trades at a 40 times next 12 months PE ratio. But it came down. And could be an opportunity going forward.
I like it.
So that was it for a little bit more software discussion here.
Yeah, we're cooking. I mean, this is the year of the rooster.
The year of the fire horse.
Yeah, fire horse. Get it straight.
Fire horse, no rooster. Anyways, all this craziness. So let's talk a little bit about another craziness that happened this week or on the weekend. I guess we should have all collected Pokemon cards as kids, because we would be probably laying on a beach somewhere sipping an Aperol Spritz right now instead of sitting in cold Minnesota in winter. Because Logan Paul sold a rare Pokemon card this week for $16.5 million.
Were you under a rock?
I guess I was.
Oh my God, Keith! That
too busy working on a bathroom.
He was doom scrolling on something else.
It's not. Is it not done yet? It was Valentine's Day and it's not done.
Lisa, we got a show here.
Okay.
Are you trying to break up his marriage? What's wrong with you?
Oh, I'm sorry. So, anyways, he bought the card. I think for $5.3 million in 2021.
And everybody laughed so hard when he bought that.
That's like, what the hell is that? That's a Pokemon card.
Is that what he really?
Oh, yeah.
Yeah. What great return on investment is that?
It's pretty good.
And the person who bought it was H.E. Scaramucci, son of Anthony Scaramucci. We know this guy. He was at
Yeah.
our
Been to our
event
events several times.
several times. Was the White House communications director for I think a hot minute. And so 16.5 million for a Pokemon card.
Wow.
That's what it is basically at the end of the day. So that's crazy.
Mhm.
So anyways, I want to know from you, do you think you have anything in your basement, in your attic that you think, oh, maybe in a couple of years, could be worth something?
Kyle?
Keith's basement's just full of Beanie Babies.
Oh, yeah.
Of what?
Beanie Baby.
What is a Beanie Baby?
No.
Wait, you don't know what a Beanie Baby is?
No.
Whoa!
It's like a little. I don't.
It's like
think
a
we have
little.
any.
It's like a little stuffy, like a little stuffed animal.
Is it
With
like the
beans in it.
Labubu? Because they are like
No,
going
no, no.
crazy
It's not
right
a
now.
not a Labubu. It's like probably triple the size of a Labubu, but they
Okay.
were actually
Every convenience store used to sell them. They'd be like
Mhm.
$5. It'd be like a puppy.
But in the
koala,
what was it?
blah, blah,
Early
blah.
'90s.
Yeah.
This was the thing. Yeah. So you weren't even alive, I don't think,
Yeah.
at this point. So that's why you don't.
Okay.
Don't
They're
tell me.
everywhere.
Okay.
There was a mania in the early '90s
To collect them.
to collect them
Yeah.
because they were relatively
Mhm.
rare at that point, or like newish, and people were like fighting in the
Mhm.
malls to get the new limited ones, and
Yeah.
they were like hundreds of dollars.
Mhm.
Like a $5 Beanie
Mhm.
Baby would get turned around
Yeah.
for
And maybe the time for the Beanie Baby will come. I mean,
Well, this is like
I
that. It's
almost have
another
a whole box full.
I
or
have
something.
none.
we don't disclose your address, Kyle. You can spill
yeah,
the tea.
No, I never.
No one is coming for you.
I was never a Beanie Baby fan.
Mhm.
But yeah,
Are you collecting
comic
something?
cards? I had comic
Oh,
cards
nice.
and baseball cards and football cards as a kid, but they're not worth anything.
Okay.
And I don't know if I could find them even if I had an opportunity. They're probably in a box somewhere.
okay.
Funny you say that. My wife was cleaning out the basement a month or two ago, and she came across all my old football, baseball cards.
Oh yeah.
And so she ordered off Amazon a nice box, like a plastic box, so they
Yeah.
fit in there. And all of a sudden, because I didn't know how many, I don't know, a couple hundred, whatever. Filled up that box, and she goes, "Yeah, dang, this wasn't enough." So then she ordered another
really?
thing, and it still wasn't enough.
Oh,
So it's
really?
like,
Wow.
I don't have that many, but it seemed for whatever
Keith,
she
you
was
should
ordering.
you should take a look of what it is worth. Maybe
Yeah, same thing. I'm sure there's not a one that's worth more than $2. in
Yeah,
there, but
right.
I
Uh-huh.
wish.
Everyone thinks they've got like a little piece of gold in there.
Yeah.
You know, from when I was a kid, that was
Mm-hmm.
70s and 80s. I don't think there was anything worth.
Mm-hmm.
Yeah.
No Mickey mantles.
I've got a
or-
Kirby pocket or two,
Yeah,
but
exactly. Stuff like that.
it's not worth
Nothing
anything.
More sentimental value.
Okay.
How about
No,
you?
No, I didn't collect. I don't even know
Sounds
if
like
that's known in
Labubus.
the. No, did you know the Deedle mouse?
No.
no.
No, maybe that's a European thing and not. I don't
A
even know.
Deedle
Deedle
if-
mouse?
A Deedle mouse. It's called Deedle, and it's like even the name is weird. So it's like a little mouse-ish figure, and they were printed on everything, like on notebooks and on whatever. And we trade these like back and forth in school and all of that. And you had like special boxes where you put them in, and with different special editions as well. But it's all surrounding the Deedle mouse. That's that kind of figure. That's
I'm gonna have to look this up now.
yeah. So that was I think the main thing, but that's not worth. I mean, you guys do not even know that. That's not worth anything. I couldn't even find it, I think. So yeah. So I obviously didn't collect anything useful. So
There we go. None of
I
that
destroyed
16
my
million.
future
No.
even as a child already. Nothing worth 16 million for sure. Anyways, that was a fun one.
Mhm.
We will be back next week with maybe a little bit more substantial topics.
Yeah.
More on the
It's
Deedle
more-
mouse
more-
next
more-
week.
more
on
from the
Deedle
rooster.
mouse. Yeah, more from the rooster.